Well, as promised, I'd say I'd come back with another video about inflation to explain exactly what is inflation. So previously we talked about why gold is dumping, and I gave you reasons, valid reasons why we've been having this down move, and it all rotates on macroeconomics. Go check the go check the video. So that being said, my name is Rocky Calvin, and welcome to this other lecture. So what is inflation? Inflation is the rate at which the general prices of goods and services increase over time, causing purchasing power of money to fall. It's just as simple as such. Inflation is the rate at which the general prices of goods and services increase over time, causing the purchasing power of money to fall. For example, I'm going to give you guys a very good example because this has a very strong relation to to trading and everything. If if let's say last year you are buying let's say a loaf of bread at let's say $100, okay, 100 USD, and this year now let's say this year so this was last year, let's say this was last year, then this year you're gonna be buying a loaf of a bread at let's say 110 USD, 110 USD, right? So this is gonna be this year. Just pay close attention. I want to show you guys what inflation is and how it affects also these markets and all the CPI news, the consumer price index, the NFP, non-farm payroll, and unemployment claims and everything. They all rotate under inflation. So once you understand inflation, it will be easy to maneuver around this other stuff. Okay. So if let's say you're buying a loaf of bread, let's say a loaf of bread, let's say bread loaf. Come on, why is this not? Let's say bread. Okay, this was the price of bread last year. You're buying it at $100. Okay, but this year you're buying it at 100 and what? And 10. Now, the same bread, like this, like the quantity and the size or anything hasn't changed. It's the same bread that is costing you this surge, this higher price. Now, this simply means that there's an inflation of about 10% because now your 100 US dollars buys less than it did before. Okay. Now, let me give you another very good example. Imagine if you have, like, for example, let's say a basket containing bread, milk, and fuel, rent, and maybe electricity, and you see an average cost will be something, let's say, like 10,000 USD. Let's say like it will be like something like come on, let's say it would be something like 10,000 USD, right? Okay, that's 10,000 USD, right? Then this year it goes higher and you start paying something to start paying start paying 10,500. So that's a 500 on top. Start paying 10,500. Okay. So this means that you are paying 500 extra on top, right? So this simply is that the inflation rate is 5%. Now I want us to take a look at what usually causes inflation. Inflation is caused by something known as demand pull. Demand pull inflation. We have demand, and so with demand, it's the same issue that's happening right now between Iran and US and Israel. They're creating what we call demand of oil. Okay, so them creating demand of oil means that people have to spend more money when buying fuel, sorry, or even oil. Okay, people have to spend more money when buying fuel. When you spend more money when buying fuel, meaning that that fuel is scarce. So the supply of this fuel are likely to hike the prices because demand is like there's demand. Okay. So too many people want to buy this so-called oil right now. Okay, like the scarcity, because now the Strait of Hormuz is not operational as it used to be. So a lot of people are trying to buy oil. So the supply or the supply chain can't keep up. This is one cause of inflation. Because what will this do? You will end up spending more on oil than you used to. That leads to what we call inflation. Remember, I said in the beginning that inflation is the rate at which general prices of goods and services increases over time, causing purchasing power of money to fall. The purchasing power of this money, I mean, purchasing power of money of this item in the previous days is different as compared to right now. Right now, it has risen, meaning that money, the value of money is literally less as compared to earlier on. That's one reason for this what causes this is one of the reasons that causes inflation. Okay, we have a second reason. We have something known as cost push inflation. Now, oh my goodness, cost push inflation. This is situation whereby the businesses faces higher costs such as wages and let me put it down for you guys. We have something like a cost. We have cost push. Oh my goodness, what am I saying? Inflation. Cost push inflation. Okay, this is a second reason, or some other reason, on like what causes inflation. I'm trying to give you guys what causes inflation here, and I'm trying to educate you on inflation, because if you don't understand these things in trading right now, it's so important. If you understand how to do macro, macroeconomics, and and the fundamentals, it will give you very easy time to know what exactly is going to happen here. So when you see a setup that, for example, if the geopolitical factors, for example, gold is competing with oil in terms of attracting investors, and oil end up winning because the scarcity of oil, you definitely know that anytime gold gives you a beer setup, you take it because it is aligning with those fundamental or macroeconomic factors. So I want to talk about the problem with these things, that when you switch out a little bit, it starts misbehaving. And let's talk about cost push inflation. So this is a situation whereby businesses face higher costs such as wages, fuel, or maybe production materials such as raw materials, and they pass those costs to consumers. So in this scenario, you find that maybe the government is now telling some of the production companies like to pay more in terms of taxes and so on, or maybe these companies are using so much money in production in terms of raw materials, or maybe just transportation, they are using so much money. So instead of them taking this responsibility, they push it to consumers. So when they push it to consumers, simply means that the consumer is going to pay a lot more money than they used to be. And I think this thing is happening everywhere. If you take a look at every country, no matter where you live, if you take a look at the amount of money you used to spend in shopping in a couple of years, and right now you see there's a difference. Why do you think that is happening? It is inflation. So the cost push inflation is a situation whereby you see the businesses they face higher cost, and then they just push them to the consumers. This leads to inflation. Now the third cause is going to be money supply growth. We have a concept of money supply growth. I hope you guys are taking notes. Money supply growth. Okay. Now, when there is more money circulating in the economy than the amount of goods services available, price can rise. Now, money supply growth, this is where sometimes some governments make mistakes. There's a concept of money printing. When the government starts printing money illegally, because you see, yes, the governments can do that depending on who's on power. If they don't have people who are educated, who knows like economics properly, they'll end up thinking that if we print more money, then everybody has money, then we're going to solve the problem of people being broke. Very dumb. Like okay, I once had somebody making such excuse. There was this guy who was telling us, like, why can't just the government print a lot of money so that everybody can be a millionaire, so that you can live all a good life. But it's not that they don't understand economics. That's why they're thinking the way they're thinking, because we have this problem: money supply growth. This is a situation whereby there is more money circulating in the economy than the amount of goods and services available. So in this scenario, let me give you guys a very good example. If everybody right now becomes a millionaire or a billionaire, let's say for example me, let's say I was a farmer and I used to farm, and I'm farming. Why am I farming? For so that I can feed my family, so that I can get money. But in real sense, I don't like farming. Then there's another guy who is a driver, and why is he driving? So that he can pay bills, but literally he doesn't like driving. Okay. Then you end up giving these people money. They have a lot of money to spend. But now they cannot provide this service, because you see, for example, if you give a driver millions of dollars, they'll be like, why should I be struggling, 9 to 5? Why should I be driving if I have all this money? Let me go just spend it. So that will leave a blank space into service. So this will literally take off service somewhere. If you give a farmer a lot of money, they will end up abandoning their farming duties, because now they have money. So the problem here is that there's a lot of money in circulation, everybody have money, but now in terms of services, in terms of goods, nobody is delivering. So it becomes again useless. You find that people have a lot of money, but now like the few who are saying that I'm gonna do these jobs are gonna be charging so much money. So the money is going, the currency is gonna lose its value. That's another cause for inflation. So another question comes in. So is inflation always that bad? Well, it is not actually necessarily bad, but when you have low and stable inflation, around maybe let's say 2 to 3% annually in many economies around the world, is usually considered very healthy, and because it encourages people to spend and and invest. But when it goes to to high inflation, high inflation most of the time reduces purchasing power and can make it difficult for household and business to plan. So high inflation, whereby it is not such a it is not such an easy task for businesses, and household. Then apart from that, we have also the concept of deflation, whereby you see when prices are falling, deflation is just prices falling, inflation, prices rising. So deflation can also be harmful, because it may discourage spending and slow economic growth. Money is not meant to be hoarded. Money is meant to be spent. So if you deflate, meaning that people are gonna be like, the spending, it like literally it's gonna discourage spending. And when people are not spending, meaning that economy is not growing. Okay. So about this, all this have a relationship with the trading and everything. So if you understand what inflation is, and what it leads to, and I've explained to you guys, for example, the matter I've given you a very good example here. This is gold. Gold and oil are often safe havens. Gold, silver, and oil. So investors usually like investing like their money in here as a safe haven in at the times when they whereby there's low interest rates in especially in the US dollar, so they run to these ones. But imagine a situation whereby oil, apparently Iran, the Strait of Hormuz has been closed, so meaning that there's demand for oil. If Russia and Ukraine keep on fighting, there's going to be another challenge of oil. So what does that lead? That leads to something known as demand. So if it leads to demand, meaning that you're going to spend more money than you used to, and I've given you guys example here with the bread. Okay, you're going to spend more money than you used to because of this demand issue, and that will lead to automatically inflation, because now inflation is a situation where you're spending more than you used to. So this was quite short on, but I hope this was straight to the point. In case somebody has a question, you can just hit me up. We fix it. But I think this was well explained. If somebody has a question, just hit me up. But that's all about inflation. I think I'll go deeper into fundamental side of things and macroeconomics sooner, because with what's happening in the world currently, we really need to be aware of these things. We have to pay close attention. Technical analysis is not enough. Trust me, it's not enough. Technical is just one side of it. A successful trader is the one who understands both sides of the coin. Like you understand what you see the dollar is doing, and in terms of price action, you can also always come and do your technical analysis. You see, we have a bearish inefficiency over here. We have market structure, shift down there, and price just came there and respect. So I'm really anticipating when gold this when the market opens this week. Today is a 20. Today is Saturday. It's 19th. Tomorrow is gonna be like after, like in a few hours. We're gonna be in Monday, and it's gonna be 20th. I'm expecting a drop here. Why am I expecting a drop? Because Iran killed some two U.S. soldiers in Jordan, I think. If you guys read the news, and you see, this is where you have to think like an investor. So imagine a situation whereby Iran killed two U.S. soldiers in Jordan in drone strikes, I think. Then what did Trump say? How did Trump respond? Trump said that Trump told the Central Command to unleash hell on Iran. What does that mean? War is coming. War is still going on. And I've just seen somewhere also US is saying that it is either Iran, no sorry, it's either Russia or China who is feeding Iran with information on where to target US embassies, sorry, US military camps and sites. So you see, this issue is slowly becoming big and bigger. The sooner China is involved, the bigger the problem is gonna be. The sooner Russia is involved, the bigger the problem. Like the deeper we're gonna be into that hole, into that rabbit hole. So that being said, the fact that things are not really looking good in the Middle East, and Trump has reacted and said that strike those guys. This simply means that fuel or oil is gonna jump up. And right now, investors are also aware of this. You see what I'm telling you guys right now? If you're an investor, this is what you need. These are the type of events or news that you have to pay attention to, based on what Trump has said. So, meaning that you're going to invest in oil because oil prices are going to go higher, and that is bad news for gold. On the other hand, it isn't bad news for US dollar, because in US dollar it mostly plays around the interest rates, because investors always invest based on interest rates. So I'm not going to go deeper more than this, but I hope this was helpful. So see you in the next one.